what are government bonds? Well, they're just fiat currencies that are due for their loans in fiat currencies that are due in a certain amount of time. And as the system implodes, the fiat currency system implodes, so will the bond market. Yes, the central banking emperors might conjure up some trillions of dollars to buy those bonds, to monetize them. But all that will do is it will be more gasoline. It will throw more gasoline into the fire. It will just accelerate the demise of fiat currencies. Monday, September 1st, 2025, Maneco 64, home of alternative economics and contrarian views. Well, gold and silver are telling us the central banking emperors have no clothes. That's what we're going to look at today. And I'm going to refer to a pocketbook of gold, a survival manual for monetary mayhem. And I have some good news about this book as well that I'm going to tell you about. And I'm going to refer you as well to this one. What has a government done to our money? This book will help you understand what money is all about, and why gold and silver is so important, and why fiat currency basically and central banking is, don't like to use the word, but it is a fraud, and it's counterfeiting as well. Of course, when central bankers counterfeit, they're okay. They've got the legal power to do it. That was given to them through the legislatures of the world. But when we do it, of course, we go to prison because it's wrong. And incredibly, we've had over 50 years of this I owe you nothings system, or fiat currency system, fraudulent system, that they've been able to inflate massively, of course. And there are many out there that see a deflation. Well, we're already having a deflation in terms of real money, in terms of gold. I suggest you go to tradingview.com or any other charting system and measure a lot of assets versus gold, and even silver to some extent, to see how they're not doing really well against the real money. And it's one of the reasons why the economies, at least for the bottom 90%, especially the bottom 50% in the West, is in such dire straits. And that's why there's so much political and social upheaval all around the world. I noticed that in Indonesia, they're having riots because MPs there voted for a $3,000 pay rise, not a year, a month. And I think that's coming to the West as well, that kind of protest. So before I go further into why gold and silver are showing us that the central banking emperors have no clothes, just wanted to tell you that I don't think it's too late to get out of Dodge. And what does that mean? Well, get out of fiat currencies. I've been warning even before I started this channel since 06, 07, that all fiat currencies would sink, because historically they all go to zero, and the dollar and the pound and the euro are no exceptions. That's why I love history. We need to know what happened in the past to try to forecast what's going to happen in the future. So yeah, that's what's going on, and it's not surprising. It's taken a while, of course, but they've been able to drag on this system for a long time, mainly because it's become a global racket. It's not just one country doing it, it's the whole world, all the major economies. Yeah, what I wanted to let you know is that you can still exchange your fiat for gold and silver. And the purpose of my channel is not to sell gold and silver. It was never that. It's still to warn people about the system and how your savings are not safe in fiat currency. But I've always had the question, where can I buy gold and silver? Because I've been stacking since '02. For some reason, I decided to diversify from my pension, and I bought some Krugerrands, and I started looking down the rabbit hole. So a lot of you have asked me, and I've told you, do your due diligence, do your homework, find the most reputable dealer. But I also have a couple of affiliates in gold investments here in the UK. I've been dealing with them since I started stacking back in '02. It's a family-run business. All the details are below in the description. And Andy Scheckman at Myers Franklin, the reason I've been dealing with him is that his father, David, he's been watching this channel for years, and he told Andy about my channel, and we've become good friends. So yeah, in North America, you can contact Miles Franklin. I have a link to the landing page at Miles Franklin in the description as well. So there you go. Back to the central bankers. And have you noticed that central banking headquarters are massive buildings, classical buildings, Renaissance buildings? And why is that? Well, because it's the only thing that gives them credibility. Can you imagine? You know, because they could do the job that they do from a little office like in South Dakota somewhere. They just need a Zoom and some telephones, but that doesn't look credible, does it? So they have to have huge buildings. We saw the renovation cost billions in Washington, D.C. Have a look at Google New York Fed, Liberty Street, and look at their building. It looks like a Renaissance building from Florence and the Medici, and that's what it's all about. It's all about like fooling people and management of perception. But the only thing that really exposes central bankers and the fraudulent or counterfeit currency and credit that they create out of nothing, the only things that expose that are real money, i.e. gold and silver, physical gold and silver. And that's why they've always been so defensive about gold. Even Paul Volcker, he admitted that gold is the enemy of the central banker, because gold is real money. It can't be conjured up out of thin air. It can't be written on a ledger out of nothing, or typed on a computer out of nothing. It's God's money. Gold and silver are God's money. It's in the earth, or running through rivers, and you got to work for it. And it's not easy to find. And for some reason, it has been chosen through the millennia as money. And it's difficult to really explain why, but that's what humans have done. And that's why I recommend you read this book by Murray Rothbard. He talks all about the history and all about money, how it started out. And I'm going to put a link below in the description. There's a free PDF to the Mises Institute. They provide this book for free as a PDF, but you can also buy it from the Mises Institute, and I highly recommend you look at the Mises Institute, because it was through them that I learned a lot of what I know about the monetary system, about economics. Yes, they are the premier institution for the Austrian School of Economics. Austrian School of Economics is the antithesis of the statist Keynesian economics that we have. So the Austrian economists, they therefore small government, rule of law, free markets and sound money. It's very simple, and also therefore peace and cooperation and trade, prosperity, all those good things. While the Keynesians are, well, they're the globalists, and they hate gold and silver, of course, because Keynesians are statists as well, and gold and silver put a limit on what statists can do, because there's a finite amount of it, right? The bankers hate it too, because they can't make as much profit, because it's limited. While with fiat currency and that, it becomes like we're talking about quadrillions now, actually, in derivatives, notional amounts. So they rake in huge profits from that. So the bankers hate gold and silver as well. But I think after over 50 years of this fraudulent I owe you nothing system, and this is what John Exter, who was actually a central banker who worked for the New York Fed, he called the system after 1971 I owe you nothing's currencies. And it's not just the dollar, it's all of them. So, yeah, I think as I speak here, it's Monday, as I said, it's 7:20 a.m. London. And yes, it's Labor Day, so the markets, the markets, like the stock markets, are going to be closed, but the futures are trading, and other countries are open. We've got gold at 34.82, the spot price. It's up $35. So it looks like the breakout that we saw last week is being confirmed. You never know in the short term what could happen, but you need to hold on because this is the end game for fiat currencies, in my opinion. I don't know how long it's going to take. It could be months, it could be half a year or a year or two, but it's going to get very turbulent, in my opinion. So yes, gold and silver continue to trade really well. And what's happening is fiat currencies are dropping, really. That's what's going on. And we got spot silver actually breaking through 40. Not that 40 was a key resistance, it was more 39.50, but we are at 40.56 this morning, up 2%. Gold is up 1%. The Dow, S&P, and NASDAQ futures, they're down very slightly, so it's fairly quiet, not surprisingly. I've noticed, though, that the 10-year JGB yield, that's made a new high. It's the highest level since 2008. We're at 164. And I was just reading about a 2 trillion euro Dutch pension headache is coming for European bonds. So the Dutch pension fund managers, they're going to divest hundreds of billions of euros out of the longer end of the bond market, bonds like 10 and 30 years. And we know that in Germany, US, UK, and Japan, these yields are going through the roof. Yes, they're still under control, but what are government bonds? Well, they're just fiat currencies that are due for their loans in fiat currencies that are due in a certain amount of time. And as the system implodes, the fiat currency system implodes, so will the bond market. Yes, the central banking emperors might conjure up some trillions of dollars to buy those bonds, to monetize them. But all that will do is it will be more gasoline. It will throw more gasoline into the fire. It will just accelerate the demise of fiat currencies. And I told you I've got good news about a pocketbook of gold. So yeah, a pocketbook of gold, a survival manual for monetary mayhem, and I think we're right in it. And it's great that I've got the news for you. And it was written by Jim Sinclair, who unfortunately passed away a couple of years ago now, or maybe a year and a half ago, and Peter Carlin, who I never really knew who he was. And about 6 weeks ago, I was contacted by Peter Carlin, of all people, and he watches the channel because he's seen that I talk a lot about this book. And this book, of course, was published back in 2010, 2011, don't know exactly the year. And I bought it off Jim Sinclair's blog, JS Mindset. I don't know how much I paid for it, 20 or 30 pounds. And it's become really popular. The only problem is that they didn't publish that many. And now they're like worth hundreds of dollars. I'm not sure how much it will cost to buy one, maybe on eBay. But as I said, Peter Carlin contacted me, and the good news is that they're gonna do a second edition. They're gonna publish more of these, and you'll be able to buy it. And he also wants to come on the channel for an interview, and that will be great. And talking about this book, I want to talk about chapter 2 here because it's very relevant to what's going on here. Chapter 2 is a part where they talk about what is gold. Well, the first part of the chapter is gold is the ultimate form of international payment. Well, we're seeing that, aren't we? Why are BRICS loading up on so much gold? Well, because the dollar system is going the way of the dodo bird, the dollar payment system, for that matter. And we saw over the weekend that President Trump was able to help BRICS. How did he do that? Well, the relationship between the US and India went down the drain. So now India and China are new buddies. They're part of BRICS, but it was always a little difficult relationship. So that's going to accelerate things even more in terms of countries loading up on gold and using the dollar less and less. Second part is gold is a barometer of fear and confidence, not inflation. Well, that's true as well. There's a lot of fear right now, and the confidence in the system is buckling, I would say. Gold is a measure of geopolitical power. Well, yeah. He who has the gold makes the rules, right? It looks like that's shifting, well, in relative terms, a lot more away from the United States to the BRICS. Am I for the BRICS? No, I'm just trying to tell you what's going on so that you can protect yourself, hopefully financially. This is a really good one too here because we're seeing this and we're talking about this, right? Gold is a measure of government debt and the ability, willingness to repay such debt. Well, there you go. One of the reasons gold is going up now is because bond investors and Dutch pension fund managers realize that the payment they're going to get in 5, 10, 20, 30 years, it's not going to be with the same, well, it is the same currency, but this currency will have not the same purchasing power as it has now. So there you go. But the one I wanted to talk about more in detail is the last part here of this chapter. Gold is a revealer of falsely stated wealth. So there you go. And I think that's where the deflationists get it wrong because they expect to see a deflationary collapse in fiat currency terms. But the problem is that the central banks and the governments can always ramp up the printing press and make sure that those values go up. But in real terms, of course, as I said earlier, we're having a deflation. So let's go through gold as a revealer of falsely stated wealth. Let me just have little sip of my coffee. Yeah, that's Rudy. And it says, Sound Money Stacker, we trust in metal. For those of you who don't know, there is a merchandise store for the channel. It's below in the description if you're interested. If you're not, don't worry. Anyway, gold is a revealer of falsely stated wealth. Let's get to it. When wealth is overstated and expectations for future wealth are unrealistic, fiat currencies depreciate. Well, what comes to mind when I read this is the fact that stock market capitalization as a percentage of GDP, which is a measure Warren Buffett likes, it's at all-time highs, like 210%. Anyway, that depreciation is borne by the citizenry. Yeah, the bottom 90% who don't have many assets, who are forced to lower their living standards to compensate for both personal economic mismanagement as well as the mismanagement of the affairs of state. Well, we know all about that, don't we? Financial and military overextension has a social corollary in overpromised Social Security, Medicare, overstated real estate equities affluence. As expense runs out of control, well, that's deficit spending, guarantees to the citizenry also explode as politicians seek to retain the privilege of office. Yeah, inflate or die, right? A big, beautiful bill. But the promises of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. And I would add, though, that having real estate over the long term, over generations, is a good way to store wealth. I think what they're talking about here is rampant speculation and borrowing to try to make money through real estate. Wealth that was taken for granted suddenly appears ephemeral. And I think that's what gold and silver are warning us. And it's also warning us that the central bankers and governments, they're not going to allow for the deflation in fiat currency because they're fighting for survival. So what gold and silver are going to do, they're going to reveal what real wealth is. The amount of currency which one bought certain things no longer does. But wages have not risen along with prices. Yeah, we know all about that too. Instead of wealth, citizens get saddled with a big chunk of government debt, i.e. debt created by mismanagement. The result is everyone pays for more for food, fuel, and other basic necessities. Government passes on the mismanagement of economic affairs to its citizenry by devaluation. As the imprisoner money manager Martin Armstrong has artfully stated, and I quote Martin Armstrong, the decline in the value of a currency is in reality a free market tax taking away wealth that is overstated. So currency can also be an indirect tax to compensate for the poor management of the state, end quotes. The corresponding rise in gold, especially when it is a global phenomenon, and it is, gold is going up in all currencies and making new highs as well, as it is now, is in effect a devaluation of all the world's currencies and the restatement of wealth on a global scale. As is both presently and historically evident, the attempt to restate wealth to a lower level becomes a competitive event in its own right, as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. That's what it's all about, indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the 9th nation to do so in a 3-year period. Falsely stated, and assumed wealth, largely created out of the assumption of debts that can not be borne, must eventually reset at a lower level. Populations bear the restatement of wealth through the expansion of monetary aggregates. Well, look at M2. Yes, real inflation. It's making new highs. It's really taking off. Look at the chart. And what this expansion of the monetary aggregate does, it causes the devaluing of national currency that denominates their wealth. This happens to all currency holders, regardless if they personally assumed any debt. Gold rises because gold is a monetary proxy inversely related to a nation's currency. And that's what a lot of people don't understand out there. They think it's just a commodity, but it's not. Yes, it's a commodity, but it's a monetary one. The burden of indebtedness is reduced along with the standard of living. Commodity prices increase. Debt deflation has become currency inflation. They are one. So there you go. With that, I'm going to wish you all a very good day, a very good Labor Day for my viewers in North America, and a very good week as well. Take care. Bye.